Well, switching gears here, we're watching shares of CVS this morning after the company saw sales rise almost 11% from last year, boosted by its cost-cutting implementations last quarter, but slashed its full-year unadjusted earnings forecast. But trouble could be on the horizon for the healthcare giant as it faces nationwide walkouts staged by employees over working conditions, which they claim are putting customers at risk. Megan Fitzgerald, Grey Ghost Advisors, PE investor, and Columbia University healthcare policy professor, joins us now to discuss. Megan, a lot to get into here, and we'll get to the walkouts. First, want to get your take, kind of broad strokes, on what they had to report on the sales front and ultimately the health of the business, if you will.
Nice to see you. So I think they beat on the top and bottom line. Not a surprise. If you look back, they have a predictable record of, beating estimates. So I think the revenues being ahead of consensus, driven by the healthcare services segment, which really bodes well for their strategy. As you know, they spent about $10 billion buying new assets to get into the home and also extending their vertical integration strategy to give direct care, prescription care, and health insurance benefits through Aetna. So I think this is an affirmation of that strategy. They also did a nice job on the cost cutting, eliminating 5,000 jobs. So that strong OPEX management and that revenue growth really allowed the revenue to drop right to the bottom line on the EPS line. However, I think what the street is upset about here in pre-market trading is they lowered their full year unadjusted earnings, and they painted a somewhat modest outlook for the second half of 23.
And Megan, I want to ask you something that's come up within this space is the pharmacists and labor concerns there. You have this walkout of some pharmacists going on strike as well. Is there any cause for concern from your view in terms of how it affects the balance sheet for CVS?
Yeah, I think the concern really is the ability to serve. They did see some softness in the front store prescriptions. They didn't tie that directly to labor, but when you have walkouts and that's their largest workforce is their pharmacists. They're known for being a pharmacy forward asset. And so when you have so many pharmacists that are, upset and walking out and demanding better pay and better benefits, I think it is a concern. So we'll see how that's handled in the next week. I think today was the third day of that walkout. I remember going to my CVS here in downtown Naples and on a Saturday, and it was closed because there was not a pharmacist. The next day when I went back in, they said, hey, we just got redeployed to a pharmacy that had higher volume. We're doing what we can. And I thought the spirit of the pharmacist was right. She was mostly concerned about patient care, but certainly having a busy pharmacy closed down because of a lack of staff is certainly a concern. And we're seeing that in all of healthcare, including, nurses on the front line feeling the same way.
Megan, from what we've heard from some of the biopharmaceutical companies over the course of this earnings season, companies like Pfizer are really getting out this message to the street that, hey, as much as there is kind of a post-COVID pandemic society that we're all navigating through, the need for vaccinations is not nearly what it was, or at least the administration of them not nearly what it was when you had countries making large purchase orders for hundreds of millions. So now, how does that transition into a company like CVS as well, impacting foot traffic, the number of people that are coming in, and then that knock-on effect to some of the retail aisles as well?
Yeah, we clearly have more vaccine than we have takers. So CVS stated that this morning on the call, that the vaccine uptake is down. Everyone has said that. Even Pfizer, took their forecast down due to vaccine. So everyone is now coming forward to say, vaccine uptake and banking on a pandemic uptick due to vaccines, due to foot traffic, because people are coming in to get vaccines, is clearly not playing out. So I think what you're seeing in healthcare right now is some cyclical weakness but structural strength because patients still are getting older. And in fact, recent reports show that healthcare as a percent of GDP could very well tick back up to 20%, which was the peak. So we kind of have this dislocation right now in healthcare where people need more care, they're getting older, chronic disease is obviously a big issue that's front and center, but this idea of banking on kind of the pandemic as a boon to earnings is clearly not playing out anymore.